Good morning, traders. It is Tuesday, November the 19th. Taking a look at the charts, we got the SP 500 daily chart. You can see we got the 5-day moving average running up here, and we've got the SP 500 continuously running up that 5-day. And I talk about this quite often. When you're above the 5-day, it's considered a high momentum play, and it's got a lot of power behind it. And once you get stuck underneath it, like over here when a trend reverses, you notice you can pierce through it, but the market just keeps closing below it. And that means you're in a high momentum downward move. And overall, the market continues to march higher. All the signs are there that it should be starting to get exhausted. We could see volatility start to step up. If we take a look at the VIX real quick, the VIX is down 1.5% this morning, continuing to bounce bottom along this area. This is a point here, this blue line, where it sometimes takes a little while, takes a couple weeks. We've been in here a couple weeks, and we're very close to some type of volatility spike in the indexes. So hopefully we'll see that take place. We are long TVIX with 10% of our position, our portfolio, which is a very small position. It's a high risk, high volatility play. So we could lose 10 or 15% on that small play, or we could make 40, 50% very quickly. So that is the type of play that we are in position for, and looking for some type of fear to step into the market once some selling picks up. Now, if we take a look at the put call ratio, this is a pretty messy looking chart. What you want to just really look at here is more or less this type of price action here, where more or less the bars on average, these green bars, are kind of making some extreme lows, and we're starting to see red bars here and a move to the upside, indicating that more or less people are starting to buy a little bit of fear. We saw the same thing happen over here in the markets. Overall trading low, we start to see some red bars. It's kind of once you see the red bars come into play, it's typically there's some fear creeping into the market, some people putting some position sizing on, and we're getting that same type of price action here. So we are starting to see some money during high volume regular trading hours start to buy some downside protection early in the mornings, and then it kind of fades away in the afternoon. And that's a little bit of a psychology change, and we're getting close to one of these type of, we'll see the more or less people start to buy more fear in the market. These kind of pops to the upside in the put call ratio indicates that the market's starting to roll over. And the leverage with options, you get a lot of power with a little bit of money, and so we see a lot of smart money trade options and kind of front run some of these moves. So I think we're really close to a reversal. We might be under pressure with our TVIX for a few sessions. Hopefully we'll see the volatility pick up fairly quickly here, though. Now, if we take a look over at bonds, the stocks are up about 1/4%. They were up more. They're starting to pull back. Bonds continue to hold up. In fact, bonds are on the verge of starting a trend change to the upside. If we were to just draw a downtrend across here, we're getting close to the highs of these candles. If we go based on closing prices of these candles, here's the closing. We are testing close to the close and to the close yesterday. So it's on the verge of starting to break through, and it's holding above this 5-day moving average. It's testing the 20-day. If we start to break the 20-day and break this falling down trend line, overall momentum is starting to shift to the upside, and we could start to see more money start to move into the safe havens in anticipation of a market correction. Now, if we take a look over at, let's take a look over at gold. Gold here continuing to flounder. It's trying to hold up. It had a bit of a hammer candle there. Yesterday it sold off and then recovered back on the session. It's holding up above the 5-day. A very short-term little pattern here. Overall, the trend is still down and floundering, trying to get some traction. It was on the verge of breaking out from this basing formation. It ended up breaking down, and now it's still trying to stabilize with this multi-wave correction to the downside. If we look at silver, silver is up this morning, starting to break out of this little pattern, so it's playing, it's moving ahead of gold. And if we look at gold miners this morning, gold miners, you can't see this morning, but more or less they are trading slightly lower actually this morning, more or less following what gold is doing. But gold miners are still holding up in terms of the price action. They have a higher high here, and then they've put in this more or less a higher low, not by much, but it's a higher low from down here. So it's making a higher high, higher low. It's building a little base here. It's squeezed between the 50-day moving average, the 5-day, it's at the 20-day, and it's got this little mini, you could argue, bull flag. We could start to see this pop and move back up to the upper end of this range and potentially start a reversal, but it's not there just yet. Looking over at energies, natural gas, we got long an inverse ETF yesterday. I've been talking about this for a couple days. If we take a look at the price action, over here we had a shoulder, a head. It doesn't look like much of a shoulder, but price came all the way up and came back down, forming what looked to be a mini head and shoulders. A lot of momentum to the downside, some big selling. What usually comes up very quickly can come back down very quickly. We've got a similar type of price action here. We've got a shoulder, we've got a head, we've got a shoulder, and then we've got more or less this neckline here that started to get broken yesterday. And we're seeing natural gas trade down 1.7% this morning. More or less, if natural gas gets down to this level here or this level here, this is our first target, this is our second target, and we ended up buying the KOLD, KOLD ETF, which is a 2 times leverage fund. Not a 3 times, it's a 2 times. It doesn't have a ton of volume during full sessions, but it has an ETF and it does have a market maker, so you get filled. It's a high volatility play, and so we only need 2 times leverage on it. I don't really want to jack up to the 3 times. So what we're looking for is a quick pop in this for a first target. Hopefully we get a second momentum target, get in, get out, catch this play. And if we look at this price action, you can see I've already thrown a Fibonacci extension targets on here. We've got the low, and then we got the high, and we got the pullback. And when you throw this Fibonacci extension target, it says, okay, this is the first target of where price should start to take a potential breather. And then we've got this 31.58 for KOLD. More or less, we're looking for our first target somewhere right about here, and then our second target right about here, which brings us into these previous highs. And typically, I don't want to go right to the highs. Usually, the market will stall out before that. And that's why we want to get out down through these highs, not at the ultimate highs. And we could catch some of this move. Now, based on this move, that would be the whole first momentum move. Obviously, it's already had a nice chunk of that move, so we're just looking for this last quick pop of 3-6% type move, get in, get out, and wait for some new setup in the market. Looking over at crude, down 1.3%. Yesterday, it gapped higher, sold down. Today, it's picking up speed to the downside. Again, it's going to have this support level across these spike lows. Well, there's one down here, but more or less, if we want to connect a couple lows here, we'll somewhere down around this level here, where we're going to have multiple levels of support. Overall, if it starts to break these levels, then I think we're off to the races for a 52 or 51 and potentially even further. We'll see how the energy sector goes. The XLE, well, there's the inverse, the ERY, to take advantage of this if crude goes down. So then we're playing the basket of stocks based around the energy sector versus just oil. We'll see if we get a setup that we like there. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.